Let me now bring on board Funny Shekhar, Fund Manager with Angel Stock Broking. Funny, morning. Thank you for joining us. Funny, what do you think did the trick for Indian markets on Thursday?
I think the bold decision by the government to increase the fuel prices, this was at a time when people had almost given up on any tough economic measure by the government. And also the fact that the Reserve Bank took some rearguard action in the sense that it started talking tough to the exporters on why they were not bringing the money back. Also saw some downward pressure on the rupee in the late trade. I think a combination of the two measures has actually, albeit in a technical sense, might have helped the market to some extent. But I don't read too much into this for the simple reason that the petrol price hike that you saw was the least that the market expected, because we want to see more on more contentious things like diesel and LPG, which are the bigger hits. And the government at the best is trying hard to survive by taking one bold decision when it almost becomes inevitable. So, there is no broad expectation about many more drastic steps like deregulation or things like that. But if it can move a little bit on diesel and a bit on LPG, maybe 50 rupees on LPG and 2 or 3 rupees on diesel, I think the mood will be a little more positive, and that should help both the currency and the markets.
Funny, what do you like within the banking space?
The larger private banks, the likes of Axis, ICICI, HDFC, for two fundamental reasons. One is the structural one, which is they have an inherent advantage as compared to PSUs. This we have seen as they have been cornering a higher market share and growing at a higher rate. The second point is, if you actually see the larger well-run private banks, their provisioning is much better. It has been better in the last 2 to 3 years, and this has actually helped them post better numbers in tough times like this. So while you see the best run public sector banks struggling to get to a PCR of 70%, most of these private banks are already much above that. So, a combination of these two things gives us comfort that even when you will see maybe some more deterioration in the asset quality in the next 2 quarters, the private banks, especially banks like Axis Bank, where valuations are again relatively undemanding compared to its peers, might give better risk-adjusted returns.
Funny, is there merit in being bullish on Mahindra Satyam? The stock is trading at a P multiple of less than 10 times. The company is growing, and they've gone on record and they've indicated that the business environment for the company in the near term will only improve.
Well, one has seen marked improvement in the performance of Mahindra Satyam, but we have to remember that in some time into the future, this will be a merged entity, which will be Tech Mahindra and Mahindra Satyam. And in that merged entity, telecom will still constitute 48% and PT will be around 17%. So if you look at the combined, valuation of that merged entity, it is quoting at around 8 times current year valuations on a conservative basis. Now, if you compare this valuation with maybe a stock like an HCL Tech, which is trading at around 13 times, the valuation gap certainly looks large, and common sense should tell you that there will be some appreciation in the multiples of Mahindra Satyam and Tech Mahindra combined entity. But having said that, I think it largely depends to what extent the combined entity succeeds in getting back its lost market share and gaining large contracts. Because as we have seen, even iGate after acquisition of Patni has got a larger revenue base, but 6 months or 9 months into the acquisition, they have not made any marked progress in terms of deal wins. Now, if this combined entity of Mahindra Satyam and Tech Mahindra goes the same way, then I'm afraid I don't see any material improvement in the valuation multiples. So, the short answer will be one has to wait and see how the integration of the merged entity pans out, and then one has to take the call. If it pans out satisfactorily, then I think there is a case for a 20% appreciation, at least in the valuation multiples.
What is your big investment idea, large cap or mid cap, for next 2 or 3 months?
Well, we are closely looking at the large caps, and we want to take advantage of the correction in the market. So among the auto space, we like Bajaj Auto. Among private banks, we like Axis Bank. Among the defensives, Dr. Reddy's seems to be a good idea, and if one wants to take a look at power, then I think Power Grid after this correction seems very interesting.